The world's largest asset manager, BlackRock, has officially filed for a Spot Bitcoin ETF. This is major news in the industry during a disastrous period in crypto. If you're a Binance user as well, there is some fresh news for you. Stay tuned, we discuss all this and more in today's Collective Shift weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes just for you. As always, we'll start with a market update with Matt, followed by the new BlackRock news. Matt, what does the market look like right now?
Thanks, Leo. Mostly flat on the week for crypto. The whole market was down ever so slightly. Bitcoin was up about 2% and ETH was down 1.5%. Continuing to see this trend of, Bitcoin outperforming the rest of the market with the news of, exchange to listings like we talked about last week with all the, uncertainty about the status of those as securities. That sort of just continued to be the trend last week. And we've seen Bitcoin dominance. So for all the listening who aren't aware of that, it's just like, what is the percent of Bitcoin's market cap as a percentage of the whole crypto asset class? And right now it's up to its highest level in just over 2 years. So that's at nearly 50%. So, what is the value of Bitcoin? It's nearly 50% of the entire crypto asset class. So continue to see, Bitcoin, it's sort of the safe haven within a very risky asset class. And that's sort of proving true once again throughout the week. And then big inflation data last year. It's just the same sort of trend that everyone's been hoping for. In the US, the fresh sort of inflation came out and that came in at 4%, over a 12-month basis. So that was, down from 4.9% the month prior to that for the annual inflation rate. And it was slightly below the consensus expectations. So yeah, we've seen it again, that 4-year high, I think it was last year in June, it was 9.1%. And we've seen that steady fall since. So, encouraging to see there. Finally, in a big week in terms of macro, the central bank came out in the US, so the Federal Reserve, and announced their latest, rate decision. In this case, actually held rates steady. That was ending a streak of 10 consecutive rate hikes, some of the fastest hikes in history. So probably the big takeaway from that was that the market sort of honed in on the Fed's commentary that it was still expecting to increase rates by 2 more times by the end of the year. They've gotten these sort of projections wrong a lot of times, but still the market sort of just treats them, as gospel at the time that they're announced. So we saw some markets reacting to that. Another 2 rate hikes would definitely be going against a lot of analysts' sort of expectations that they may even start cutting this year. So it'll be interesting to see, what happens, in the next 6 months or so. But that was all in the markets over the past week.
Matt, I just wanted to double click on something you said there about Bitcoin dominance nearing 50% in the market right now. I think Bitcoin dominance is actually really underappreciated, right? People come into crypto, they see all of these other shiny coins and tokens all around, but don't realize that Bitcoin is 50% of their market. Now, I know at Collective Shift, we do see a whole bunch of newcomers coming in, but Matt, Nick, I wanted to get your opinion on just BTC dominance in general. Do you think people don't appreciate it as much?
Yeah, I think it's definitely the shiny new object people see when they come into the space is not Bitcoin, because they're always looking, maybe to speculate on other things. But really, at the end of the day, as I said, people flow into it in times of uncertainty. Then even got ETH is about 15 to 20% market dominance. And then you've got all the other stable coins, which are a big chunk as well, which really, if you then combine those, you're probably looking at about a quarter, 25% of the market is for all of those thousands of other altcoins, which I think surprises, a lot of people that I talk to, and in the community over the years. It continues to be something, as you said, Leon, that's underrated.
Yeah. And as you said, Matt, I think stablecoin dominance is about above 16%. I think it's actually approaching some of its all-time highs. So it's one of those things to keep in mind that if we even take away Bitcoin, Ethereum, and then stablecoins, the market cap for, other cryptocurrencies is actually quite small. Even I was looking at crunching some of the numbers, and we actually saw that DeFi market cap and market size was, I think, only 1 to 2% bigger than meme coins in the market, which I thought was a very interesting point, that a lot of this talk is about, DeFi and creating all these new use cases and value into the ecosystem and all these different potential. But really, it's only a couple points higher than meme coins. I'm not sure whether that's actually a potential underappreciated factor in the market at the moment.
Definitely. You can't compare meme coins and, changing financial instruments in crypto. That's crazy. Come on, Dogecoin against like Uniswap, really? Anyway, just a small commentary for you guys. We try and just keep it light for you guys, but I think we'll move on to some of the biggest news in crypto that's happened in the last week, and we'll all have a discussion about this. Now, BlackRock, I wonder if you guys know, BlackRock is one of the largest, if not the largest, asset manager in the world. They have over trillions of dollars, right? They have just filed for a spot Bitcoin ETF. So we'll all discuss this, exactly what a spot Bitcoin ETF means. But first off, Matt, maybe you can give us a small introduction to this BlackRock news.
Yeah, Leon, as you said, largest asset manager in the world, look after a lot of retirement money, like a lot, the ETF boom in the last, since the 90s, they've really been at the forefront. Probably BlackRock and Van Eck are probably the two biggest ones. And BlackRock, historically very conservative. So to see them, filing an application for a Bitcoin ETF at this period just was like very surprising to me. You could get a bit tinfoil hatty and say that it isn't very surprising, but I think, to put it in context, I think that I was actually listening to a interview by, an analyst at Bloomberg who specifically focuses on ETFs. He's done so for, well over a decade now. And he was saying before this news broke, if you asked him in the next 12 months, will there be a spot Bitcoin ETF approved by the SEC? He would have given that 1% to 2% chance of happening. He has now, in light of this news, bumped up that expectation to 30 to 40%. His guess was. And so still on the balance of probabilities, unlikely to happen in the next 12 months, but that's just how much power this sort of brand and just, reputation, trust BlackRock has as an entity. He did note something, sort of new that was in this application that was different from the others, is that it did include a surveillance sharing agreement. So that's when different entities like exchange operators and the index providers share information to really just minimize the chance of any market manipulation, which is something that over the past 8 years or so that the SEC has denied these applications. That's something they've pointed to. There's just like a lot of uncertainty about where price is actually discovered in the market. So that was something, these sharing up agreements would have to be, they said NASDAQ is one of those entities, and it would have to be with an exchange that provides some sort of trading of spot Bitcoin. So really, you're looking at those and you're like, well, who is that other entity? They didn't name that entity, which was surprising. But I think, maybe Nick could talk to this a bit in terms of, I would have to guess it would be Coinbase. Like they can't, I struggle to see there have been that many like large volume operators that someone like BlackRock would be comfortable, partnering with in some sort of surveillance sharing agreement. So the timing of this with the SEC, presuming that is Coinbase or even anyone else, it's just really, really shocked me. And I think this could be, very significant news.
Yeah, just to add in there, Matt, I know Coinbase was mentioned throughout, or rumored to be included throughout, because Coinbase and BlackRock have sort of a strong partnership, and BlackRock is using Coinbase's custody and Coinbase's services to engage their high net worth individuals and onboard a lot of their users to the Coinbase platform to access a lot of different cryptocurrencies, in particular Bitcoin. So I'm sort of expecting Coinbase to be there, and I know they were talking about Coinbase custody as providing an essential role, which is interesting given the time where Coinbase is being investigated by the SEC, and maybe this is just another positive sign that there is one of the biggest asset managers who holds about 9 trillion or manages 9 trillion of assets under management, is really sees Coinbase as a pretty sound actor in the space to want to engage with them in their upcoming products. And just as you said, Matt, the BlackRock has a 99.8% success rate or something. I think it's batting about 570 something to 1. So right. Good news, except we don't want to be the number 2 there. But I think a lot of people in this space too is really positive about, I guess, the impacts that this has on the market, considering that Bitcoin is extremely tough to hold yourself and do self-custody well, that a lot of people just want the easiest onboarding experience possible. And I guess being able to do that with the biggest asset manager in the world, just provides confidence in making it easy for people to really just want to dive into this, or even hold a little small amount with having to worry about writing your 24 words down, which is just such a awful UI at the moment for crypto.
Now, gentlemen, I wanted to break it down as well for some of the people listening. So a spot Bitcoin ETF as opposed to like a paper-traded fund, for example. So to break it down further, it means that they actually have to go out and buy this Bitcoin from the market or from someone else, like who's a market maker, for example, and withdraw that Bitcoin from the world and lock it away, right? So what's that going to do with liquidity, with pricing? Like, what do you guys think? That's going to be huge, right? It depending on how much they actually decide to allocate.
Yeah, and of course, assuming it goes through as well. But
yeah,
I think, but even if there is a spot, like if there is a spot Bitcoin ETF eventually, which I feel like we all would agree in some time in the years to come, maybe even decades, but who knows? There will eventually be that demand from these spot Bitcoin ETF issuers to then hold what could be a non-trivial amount of Bitcoin, like as a percentage of the whole supply. And yes, that is the distinction from, a futures ETF or something that, a paper version of an ETF where it's just getting exposure to the price of Bitcoin, but it doesn't actually affect the buy and sell demand for the actual cryptocurrency itself. So we celebrated last year when the first, I think, Bitcoin futures ETF got approved, but there was still a decent amount of the crypto community who were like, is it even worth celebrating just? It's not quite like spot Bitcoin, but encouraging to see that BlackRock's first filing of any sort of Bitcoin ETF was indeed for a spot ETF, which is a big sort of factor of this news.
Yeah, just add in there too, Matt. I remember there was a few other ETFs that launched in other countries. So I think US is alone here, but there are other countries that have explored doing, these ETFs. And if you go to bitcointreasuries.net, you can get a good idea about which public companies are holding Bitcoin and how many of these, how large the Bitcoin allocations to these ETFs are. Really handy little bit of kit to have a look at and really explore the potential at, what could happen when the largest asset manager starts to accumulate these Bitcoins on behalf of their, clients.
Yeah, well said, gentlemen. And don't worry, guys, we will keep you guys up to date. If there's any updates with this, we will let you know. So for now, let's talk about the crypto market and trading volumes. I'm going to go to Matt for this. We have seen a bunch of liquidity and volumes decreasing in the second half of this year. Matt, what does the volume profile look like at the moment? Is it going down? Is it going up?
Yeah, I think unsurprisingly, we've seen just a continued drop off and in just volume. So, how many people are buying and selling on exchanges? Yeah, it's really fallen away, and that's partly due to the regulatory sort of space in terms of the chilling effect or these different market makers that I think we talked about last week, how they're not they've stopped providing liquidity and stopped making markets, which then in turn affects volume. So second quarter of 2023 there was about 10 billion or so from the top sort of 10 cryptocurrencies that were traded across all exchanges. And that was the average sort of daily volume. And then the average daily volume for Q1 was about 18 billion. So it nearly halved in one quarter. So quite significant and not really at all surprising of like a crypto winter, but I guess it's just another sort of reason or something else to point to that really indicates to us that, hey, we are potentially like at the worst of it right now, which can then help you in terms of just figuring out where you are personally from just in terms of what your plans are, maybe from an investment standpoint or just your engagement in the crypto space at all.
Now, even though trading volumes, sorry, go.
I was just going to say that the trading volumes, as you said, are indicative of sentiment, and we've seen that I think within the last couple of weeks. If we look at media reporting on crypto, I know you got Inverse Kramer going on. He's telling people that crypto is effectively dead and basically just get out. And so if we combine that sentiment with declining trading volumes, it really paints that picture of where we really sit in the market at the moment.
And even though we are seeing trading volume slowly decrease in the second quarter of the year, that doesn't mean it might not pick up back again. And also because I'm seeing a whole bunch of venture capitals still raising money in crypto and still supporting projects in their development. So that doesn't mean it's the end of crypto. It just means trading volumes are going down. Part of the market cycles goes down, goes up, goes up, goes down. But that being said, let's move on to the next biggest news of the week, which has been Binance. So Binance has actually had some sort of agreement between the SEC and the Binance US people. So let's talk about that for a second. That last week we posited that this week would be one of the biggest news in crypto. Has it actually turned out like that? Matt, what do you think, mate?
Yeah, so we'll talk about this TRO hearing, a temporary restraining order, where, all the headlines were that, potentially, the SEC was requesting to the court. So before this case against Binance got started, they were requesting, hey, can the court approve to sort of freeze Binance's assets? That was a big, scary sort of headline, and it would have definitely been if the court approved that, because it would indicate that the court is really really unsure about how bad the situation is with Binance. I guess, somewhat fortunately, it wasn't as bad. So I think the judge encouraged them last week to sort of reach an out of court or like a mediation and, basically compromise on both ends. And I think they did that throughout the week. And then on Friday, the judge approved basically their compromise, which was, kind of like not really that important, I suppose, for those of you listening out there, but I might link to it, or we might link to it in the show notes. But essentially, it just, the really takeaway for users of Binance US is that they can still withdraw like funds as this sort of case continues. And there's a bunch of other things to do with who's in control of Binance US's like private keys, their software. It can only be a sort of a very, exclusive sort of set of entities, rather than, for instance, someone that isn't at Binance US but is technically in the Binance like ecosystem. So they were some some legal sort of things and factors in this case, but I guess we avoided the very scary sort of result, and now I guess we'll await for the actual case to get underway, because this was basically a step before the actual case starts.
I want to bring it back to all the people who might be listening or watching on YouTube there. Remember, we always say at Collective Shift, not your keys, not your coins. If you have any concerns about exchanges, right, use them, get out when you can, take your coins off there. It's just not worth it keeping on there. So if you have any concerns, now is a great time for you to make an assessment on this. And if we might be providing some extra resources on BNB and BUSD just to keep our members updated. So watch out for that in the Collective Shift platform over there. Now, let's move on to some recent project news that have happened over the last week. I know Uniswap V4 is starting to make the rounds. They have something cool called hooks, and it makes it very flexible for people to do liquidity provision and implement it in different protocols. I don't know too much about it. I'm not an expert in Uniswap, unfortunately. But Matt, Nick, are you guys familiar with Uniswap V4? What's all this hubbub about? What's all the news?
I'm happy to get into the broad overview of, I guess, why V4 is here. Mainly because V3, their other sort of licensed product, that is expiring. So I think now anybody can fork or use the Uniswap platform or their code to create their own market or application. So now, for me, it's no surprise we're seeing V4, because now this is their new gate kit and their new, upgraded code that nobody can use but Uniswap. So this is really exciting just to see. I actually saw they kind of increase complexity in a way, which they've continually been doing from V2 to V3 to V4. And as you said, Leon, it's just increasing the functionality you can do with Uniswap. I'm not sure if you got any more of the specifics there, Matt, in terms of, I guess, at a high level, why this could potentially provide any benefits over V3?
Basically saw, some debate about whether it was even worth calling it V4, because it kind of just builds on that V3 upgrade where they introduced concentrated liquidity and stuff. And it's almost like an extension on that. But yeah, I think for the users, we won't see like too much of a difference. I think this is more geared around, liquidity providers, giving them more options, and even developers then to build like with the Uni V4. There's a lot of different things you could do now with like limit orders and things like that, where you could build into some other DeFi apps, that could give some functionality there. What I did find interesting was that how the team announced it, they sort of, announce it as like, hey, here's what we think, of what releasing soon, getting some community feedback. So like, I can't imagine this coming out anytime soon. Like, I think they still would have to get the code audited and all of that once they agree. So, we could see this maybe at best at the end of the year, but probably maybe into the start of next year. But yeah, I have heard that Uni V3 with like concentrated liquidity, it's basically vast majority of the volume is just from the likes of Wintermute and other market makers, because of how difficult it was for just your regular liquidity providers to earn like profit. Basically, everyone was losing, not everyone, but most people were losing money when they were providing liquidity on V3. I think V4 then is able to, I guess, not make it so sort of centralized in terms of where the liquidity is coming from. So there's a lot of aspects of this. Obviously, with it being one of the biggest DeFi projects out there, like always going to be significant to see like how it shapes, different trends within the DeFi sector itself. But looking forward to seeing how the community reacts to it. And of course, we'll be updating members if there is anything significant that does come out.
Awesome. And I did hear something about a fee switch as well. I don't know if that's actually true or not. I've got to go do some more research on this in V4. But it seems to be an Ethereum week, or at least an EVM week, with more news, because we have EigenLayer that's coming out with a mainnet that has actually launched, and it was limited capacity. So Matt, I think you were also covering this. What happens with EigenLayer now? What are they up to?
Yeah, this is one we've covered a bit, at Collective Shift, and even on the YouTube previously as well. This is just a new sort of project that's offering what's called restaking. So if people have got, staked ETH, so they use the likes of Lido or Coinbase or Rocket Pool, you get these tokens back from it. These sort of holders of these liquid staking tokens can go to a solution like EigenLayer, and be like, hey, you can go use these tokens then you can use them to help secure other sort of apps and protocols. But in return for that added risk, you then get compensated. That's basically the idea. And now they've come out with their mainnet last week. It was like sort of a guarded launch where they had limits on every one of those three tokens. So that's like STETH for Lido, RETH for Rocket Pool, and CBETH for Coinbase. They had limits for each of them, and they got hit within the first day that it launched. So they'll probably take some of those guards off, moving forward. But yeah, it definitely came out sooner than what I was anticipating. So a lot of excitement around, this project, EigenLayer. And yeah, it was probably one of the highlights of last week.
That's awesome. I mean, that's good to know that we're still making strides in decentralized staking, so people can, still use their funds, which is pretty awesome. And don't worry, guys, we will keep you updated if there's anything else we think you need to know in regards to EigenLayer. But we'll move on to our last final segment here, where we look at things that are overappreciated or even underappreciated. I'll go first. First off, we have some Tether narrative. The FUD keeps going for Tether. It's not going anywhere anytime soon. As part of this, Tether came out with a giant report that they came out, and they had an agreement with the New York Attorney General 2 years ago, give or take. And now they've said they've finally fulfilled their reporting requirements. Now, they did release this report. They're not releasing it to the public, unfortunately, because they're saying that they want to protect the stakeholders and the, not shareholders, but the clients, for example. A few takeaways I got myself: they had a net profit of $1.48 billion. That's $1.5 billion in net profit for a stable coin in crypto. That's crazy. They have a treasury of $53 billion, and they said they also reduced exposure to the Chinese housing market. If you guys remember Evergrande, that used to be a giant hot topic, give or take a year ago. Don't even remember now. Like, no one even thinks about it anymore. So they've released this report. It's worth a read. I'll leave it in the comment section below for anyone to have a look at. What did you guys have for anything that was overappreciated or underappreciated?
I went with Jack Dorsey's Block Inc., who sort of teased their open beta for their Bitcoin hardware wallet. This was sort of on my 2023 bucket list items that I was looking forward to seeing if we're going to see any more details about what they're building up Block Inc., which includes Bitcoin infrastructure as well as a Bitcoin hardware wallet. So this one looks like it's going to team with the Cash App and Coinbase as well to make it much easier to store your cryptocurrency, and also when you're buying off an exchange to automatically swap that and to secure it in your hardware wallet. So really excited. We may see this launch at the end of the year, and I think we're going to see whether this receives a lot of adoption, or whether how excited people are about, I guess, Bitcoin, and this could be a really good market signal I reckon in the market in the coming years.
Awesome. I'm interested in finding out more about that Bitcoin wallet. Matt, what did you have, mate?
I think I ended last week by talking about the Sotheby's auction with a bunch of NFTs that were going through the liquidation process for 3AC. I think these were part of it, and the Goose NFT sold for 6.2 million, which was well above those low estimates that we spoke about last week. They set them low, and then people get excited when they break the estimates. And there was a bit of a bidding war between, I think, 4 entities. 3 of them were reportedly outside of the NFTs and crypto space, which was surprising to me.
Interesting.
But the crypto native sort of NFT fund, I think, ended up winning the bid. So it was 5.4 million plus 800,000 or so for a Sotheby's fee. So that was significant. It was, I think, the second largest sale ever for a generative art NFT, at least in ETH terms, that is. So very, very significant. Some encouraging signs for NFTs broadly, but I think there is still demand for those higher end NFTs. But I think what people then need to distinguish that from is that, okay, that's all well and good, but the retail or just the demand for any other NFT other than these higher end ones is really decimated, along with altcoins and crypto in general. So still something to note, at least.
We do see a lot of rich people. They like their fine art and their luxury, but you go to a garage sale, you can get any other old painting. Doesn't matter. But that leaves us... Yeah, that's right. Thanks, Matt. That leaves us to the wrap of this week, my friends. I'll say that again. And that is a wrap for this week, my friends. If you're looking for more insights, make sure you check out our revamped Weekly Shift newsletter. It provides free weekly market insights every Friday. You got to subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.